Today we have some important updates for those invested in SoFi stock or considering it as an option. These new developments highlight crucial areas of SoFi's business strategy, especially around their service segment and plans to drive revenue growth, which can help balance out risks in their lending sector. There's also fresh news about their rising customer base, another key element for long-term success. Let's dive into what this all could mean for those interested in SoFi's future. Hello everyone, welcome to Daily Stock Update. If you're new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. One of the main takeaways from SoFi's recent third quarter earnings call for 2024 is that the management is not only meeting but likely exceeding their plan for the year. Even better, they're on track with the 3-year outlook they set out at the close of last year. If you missed the details of that outlook, one of the highlights was the optimistic projection for earnings per share (EPS) growth. SoFi has only recently reached profitability, yet their leadership is predicting substantial EPS growth for the next 3 years. Seeing them confirm this trajectory is a confidence booster for investors. Now, when this outlook was initially released, I had concerns. SoFi only recently turned profitable, so there was the question of whether they could sustain this forward momentum. 3 quarters into 2024, however, their management continues to back these targets, which is encouraging. SoFi also reported that their adjusted net revenue hit a new record at $689 million with an accelerated growth rate of 30%, a step up from 22% in the previous quarter. Now, here's why this accelerating growth is notable. In the world of stocks, a company's growth rate often influences investor confidence. In SoFi's case, they're moving from a 22% growth rate to 30%. And if this trend continues, it could easily cross 35% or higher in future quarters. This upward momentum in revenue growth signals that SoFi is very much still in expansion mode. Investors now have a reason to stay optimistic that the business is on a sustainable growth trajectory rather than facing a downturn. Another key point from the earnings call is that SoFi's services segment is becoming increasingly significant. Services alone contributed $238 million in revenue during Q3, which is a substantial jump up 102% from the previous year. The management team wants this side of the business to grow faster than the lending side, as services are generally seen as less risky and potentially more profitable in the long run. To draw a comparison, this strategy is somewhat like Tesla's approach to focusing more on AI rather than just electric vehicles. However, SoFi has shown more progress in shifting its revenue composition compared to Tesla's similar efforts. With services now accounting for over a third of SoFi's total revenue, we're seeing real progress in diversifying away from the lending business, which involves higher risks. And the faster growth of the services segment also points to improving profitability, meaning the company isn't just expanding its top line, but is also getting closer to sustainable profit margins as it scales. Although not yet at peak profitability, the improvement in this area is a positive sign for investors. Now, turning to SoFi's technology platform, it reported revenues close to $103 million, a modest 14% increase from last year's same quarter. While this may not sound like a huge growth rate, tech revenues tend to be somewhat inconsistent, especially since a significant contract or client can cause sudden spikes. SoFi's tech platform may experience these lumpy growth patterns, but that doesn't negate its long-term potential. Investors, of course, want to see more rapid growth from this side of the business to complement the non-lending revenue streams, which in Q3 grew by an impressive 64% year over year. When we look at the big picture, SoFi's non-lending revenue now comprises 49% of the company's total revenue, up from 39% the previous year. This steady shift away from the lending sector is exactly what many SoFi investors have been hoping to see: a diversified revenue base that relies less on the risks associated with lending and more on services with steady demand. This development has kept me bullish on SoFi stock throughout 2024. In fact, my buy rating has been consistent, with the most recent update on October 29th. I also conducted a discounted cash flow analysis on SoFi stock, revealing an intrinsic value of $21.38 per share as of early October. So, for those curious about SoFi's value in today's market, this analysis points to the potential upside based on current financials. But back to today's news. Another significant achievement for SoFi this quarter is the addition of 756,000 new members, a 35% increase year over year. This brings their total membership to 9.4 million, a critical factor for SoFi's long-term growth plan. Members drive revenue, and with a large growing user base, SoFi has ample opportunity to enhance profit margins as these members start using multiple SoFi services. SoFi's strategy is ambitious. They aim to be a one-stop shop for a broad range of financial services, hoping that new customers initially attracted to one service will gradually adopt other services as they become familiar with the platform. Imagine a customer initially signing up for a SoFi bank account, then expanding to credit cards, investment options, and possibly even taking out a home loan. As each customer engages with more services, the average revenue per user increases, a key factor that could lead to sustained growth and profitability. SoFi's management seems confident that these newly acquired members will generate significant value over time, and this focus on customer expansion could indeed yield substantial gains for the business. SoFi's bold approach to finance is just getting started, but the results so far are encouraging. They're building a reputation as a convenient platform for banking, investing, and lending, with the hope that members will find enough value to rely on SoFi for their broader financial needs. This, in turn, could drive revenue to even greater heights as SoFi's customer base grows and matures. In summary, SoFi's third quarter results indicate that they're well on track for a strong close to the year and are positioned to meet their three-year goals. Their services segment is performing well, their technology platform is poised for further growth, and their membership numbers are climbing. For those invested in SoFi or considering an investment, these indicators suggest that SoFi is on a promising path. They're gradually shifting away from riskier lending revenues toward more stable and profitable service offerings. And with a growing user base, the future looks promising. This is a critical time for SoFi and its investors, as the company continues to strengthen its market position and deliver value. The journey is far from over, and there will undoubtedly be challenges ahead, but so far the indicators are largely positive. For those interested in following SoFi's progress, keep an eye on how well they manage to balance their diverse revenue streams and how quickly they can grow in the services and tech segments. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.